Hey everybody, so in this video I wanted to do some technical analysis on SPY, the tradable ETF for S&P 500. So right now we're currently on the 10-year one-day time frame, and I have this downtrend line. So this is the first thing that I want to talk about. So this downtrend line has basically remained intact for the entirety of a year. So right here in January of 2022, we rejected pretty hard, and we rejected once more in March, late March of 2022, again in mid-August of 2022, and once more in late November of 2022, which caused our December sell-off. Now we're trying to get back into that area again. So do note that this trend line basically extends downward, so it's continuing down. So if we're continuing this trend line, it essentially means that we're going to reject right here, we're going to fall again, we're likely going to retest it at some point again, and this essentially means that we're going to see lower highs. So do note that we do have this very, very strong support all the way down around 320. So it could be entirely possible that we just bounce back and forth, reject multiple times, we get down to this level, and then we'll see what happens there, because right here, we have a strong support here at 320. We have a very strong resistance. It meets up, and then what happens is that you end up forming a wedge. And what eventually happens when we break this downtrend line, I think that there is a huge rally in store, and that would likely represent the next big trend that we could see in the market. So right now we're currently in a very strong year-long downtrend. Now let's talk about these moving averages. So this first green line, this is the 50-day moving average. Now you can see right now we're currently above that. So the 50-day moving average is right here at 390. Now this pink line is the 200-day moving average. And this 200-day moving average is right at 397.80. So right now, price action is right around 392. It essentially means that we are wedged between the 50-day moving average and the 200-day moving average. Now, I do want to talk about certain things here. So when you see the 50-day moving average crossing above the 200-day moving average, that's a bullish signal. That is a bullish signal. Now, when you see the 50-day moving average crossing below the 200-day moving average, that is a bearish signal, very bearish. So right now, it almost looks like the 50-day and the 200-day are very close to colliding. So, for this 50-day moving average, to avoid getting above the 200-day moving average, which is a bullish signal, we would need to see a very sharp sell-off in the near term. So do notice that, when we had this strong rally up, we saw it right here. And then when we had this strong push down, we saw it right here. So for us to avoid what we call a golden cross, which is when the 50-day goes over the 200-day, for us to avoid a golden cross, basically SPY would need to sell off very quickly here. Otherwise, that scenario could play out. And, many people have been saying, hey, this first two quarters is going to be very bearish, followed by a very bullish last 2 quarters of the year. So that's what many people are saying right now. So if they want to be right about that, what we're likely going to have to see is a very strong sell-off to basically avoid that golden cross scenario. So the opposite of a golden cross is basically what you see right here, and that is a death cross. That's when the 50-day goes underneath the 200-day moving average. So now that we've covered the moving averages, let's talk about more recent price action. So I'm just going to go ahead and zoom in right here. All right, so this is where we're currently at. So there's a lot of stuff going on here. So the first thing I want to note is this yellow zone. So this yellow zone is a very strong chop zone. So right here, it was acting as a demand zone because people were accumulating right here. And then we saw price action pop off right here. And then we sold right off only to get back into the demand zone, we fell underneath it, and then you can notice that we just chopped right back into it. And then you saw more accumulation. So there's accumulation down here as well, and then accumulation over here. And then you can see that we popped off again. We sold off, and then we got right back into this chop zone. So this is what I like to call the chop box. So we recently just broke out of the chop box. But what's price action doing right now? So now it's getting into this small supply zone right here. So let me just go ahead and extend this out a little bit. So if I'm extending this out, you guys can get a better picture of what is going on here. All right, so there we go. So let me just really zoom in on this price action right here. All right. So here we are, and maybe even better, let me just go on to a shorter time frame. So let's go on the 90-day, 30-minute time frame. All right, so now you guys can really see this. So this is the supply zone that I'm talking about that we're currently trying to enter, but we're having a little bit of trouble, as you can see. So right here, notice that every single time we get above this 398 area in the supply zone, we see this massive pop. And that's because this was a former demand zone. So you can see that every single time we got on the lower range of this, you would see accumulation. When we passed above this, you'd see a nice pop. We'd sell off, and then we get right back into this demand zone to accumulate some more, pop off, sell off again, accumulate, pop off, sell off again, accumulate. And then notice right here, this time they were not accumulating. We broke underneath this. So that is when this demand zone becomes a supply zone. Now we fall back into the chop box, we chop around, and then we have a massive rally right here. And then notice that we're trying to get back into the supply zone, but we're constantly rejecting. So it's very possible that we could get back into this. So this would be right around 393 to 398. But look what's above us, this thick red line. Now this thick red line has been resistance for the entirety of a year. So it's very possible that we just get right back into the supply zone. We hit this 398-ish area. So if we hit the top of the supply zone, we're basically hitting the top of a downtrend line that has lasted for the entirety of a year. That is not a good situation to be in. So right about now, there's not a whole lot of upside in calls, but there is quite a bit of downside in puts. So I do want to note that there's definitely a bearish emphasis in this market. And if you're trying to go long here, it's a very, very risky move because we're right at about 392.50. And I said that this resistance line basically shows up in the near term right at around 398. Do keep in mind that it's down sloping. So further we go out in time, the lower it becomes. So right about now, this is going to show up at around 398-ish. So there's not a whole lot of upside left, is basically what I'm saying. It's very possible that we do get above this for a brief amount of time, and that becomes a fake out if we get right back in it. But if we do break out of this, I do want to talk about the upward situation because I don't want to be completely biased just to the downside. I want to give the benefit of the doubt. So let's just go ahead and go back onto the 10-year 1-day time frame. And I want to point out basically this line right here. So notice this line right here coincides with this very strong bullish day right here. So this candle is massive, this candle right here. So this candle was on February, late February, right around February 24th. We saw a massive bullish candle. And that basically marked a short-term bottom. So that's right around 410. So 410, 411-ish, that is where strong resistance shows up. Now notice, it was support right here. And notice we rejected right there very, very hard. We also got above this shortly. only to reject and then basically bounce off this 390 level to come right back up here just to reject again. We rejected right here again in December. So this would be hard resistance, this 410-ish level. So in my personal opinion, if we break this trend line right here, it's very possible we could see 410. But do we get above that? I mean, I think that's not very probable just given the macro environment. Now, we do have another resistance trend line that pretty much goes back in time. So let me just go ahead and talk about this one very quick. So this one is pretty much marking the top right here. So this is the pre-COVID high. Also note that, we see this area here. This goes back, let's see, when is this? This was in 2018. So in 2018, we hit this high right here. And then here in 2020, we hit this high. And then we hit it again right here. And then once we got above it, we seriously broke out. But also note that once we got below it, we seriously sold off. And then you can see that we got back above it. And then we had a pretty massive rally. Got back below it. Pretty big sell-off. You can see it was acting as resistance right here where you see these two trend lines collide. So it's very possible, maybe we get above this 410 only to hit this pre-COVID resistance line. So there's a lot of resistance is basically what I'm saying. So to be a bull right here around 392 is very ballsy, is basically what I want to say. Now, let's just talk about what a very worst case scenario would be, which I happen to think is going to be very likely. So let's go back, let's zoom in. Now, here's what I think is likely going to happen. I think we still have a little bit of upside, very possibly a little bit of upside, like I'm talking like $6-ish, right, to that 398. And we reject. Maybe we get right back down to that 390. Maybe we see a little bit of consolidation right around that 50-day moving average. And then I think we get right back into the chop zone. Now, what happens if we break this 372? If we break this 372, I think we could possibly make new lows. But right now, what we really don't want to break is pretty much this 390 level. Because this 390 level is going to take us right back into the chop zone, which is pretty much going from 371 all the way up to around 390. So it's pretty much a $20 move that we could see if we break that 390 50-day moving average. So this basically concludes the technical analysis on SPY, and I hope you guys enjoyed this video.